Turbo Trading with head trader Robert Knight, MBA.
This is video regarding how to protect yourself against these big flushes that the stocks sell off dramatically in instant and you can't get out. And so, how do you protect yourself against that move? And what we're finding in this bear market that we're in, it occurs much more often. People are very skittish. They take profit, they're looking to take small profits. And as soon as there's any kind of weakness, they start to sell, and then the short sellers and institutions and such traders, market makers, absolutely whack the stocks, and you get these big sell-offs. So how do we protect ourselves against that? So to get a feeling for ATXI, let's look at the daily first on it. And we see that this stock came from $3, and today it's traded as high as 12. But so we got some of these flush. But yesterday as well, it traded to 8 and change. Here it traded to 11 and a quarter. So you have to recognize that this stock is up, fourfold, fivefold. It's huge. That's a huge move. So there's a lot, and there's been some buying down here, not a lot, but there's still been some buying down here, and that creates a lot of overhead. That's going to create overhead resistance as people take profits as it pops, right? And it's an extremely low float stock. So it's the ability for market makers to move it violently is accentuated because of the low float. It doesn't take much to move it. So these are you have to keep these ideas in the background of your mind, that it's already up 5 times, 4 or 5 times. So there's a lot of reasons to take profits. 1, 2, it's extremely low float, so market makers don't have to move much to knock it down and get it going, because of big spreads and such, and everybody panics. But how are we going to protect ourselves against this flush here and this flush here? Let's talk about this first flush. Look at the strong move up. Consolidates. You don't know which way it's going to go. It's a trading range for sure. Oops. It pops up, it stays in this trading range, but you have this big spike up, and then big long wick fails. You get this type of pattern. Next candle's red. You need to get out of that trade. You don't know that this flush is coming, but we know that this pattern is negative. It may not, you may not, like for instance, if we look at this here, this candle's of indecision, a big flush, but then it bounced right back. So we don't know if it's going to do that or not. But what you do know is that this is, in that day it's 8.5. It's up 3 times. It moves $1 from $7.50 to $8.50. You have to be thinking there's going to be profit taking coming into this, and we know that in this market that we're getting these flushes. So you get this spike up like this, next candle down. Let's go back one step. When it moves that $1, if you're in this trade, you need to be taking profits, scaling out all the way. That way, if it does go against you, at least you're protected. If you can't get out, say it drops $1 here and you can't get out until it gets down here. But if you've been taking profits all the way up, at least you've protected yourself that way. Because we don't know that this is going to happen. We can bet that, there's a 50-50 chance it's going to go, which is a pretty good odds that it's going to happen. So you want to be taking profits. And in this market, you want to be taking profits sooner. You may not, you don't hold for these big wins. If you're in this trade, just, take the profit. That'll protect you from these big sell-offs, number one. The chart pattern also, that once you get this and it starts to go red, that and a low float stock, it's volatile, it's going to get whacked. But maybe you can't get out until you don't get out till here. You still need to get out. because then look what happens. Now, in this next one, where you get this flush, there's no reason to be owning this stock. So you shouldn't have been caught in this flush. It's a descending triangle. After a big overhead, big flush like that, drifting lower, no volume, there's no reason that you should be buying this stock. So this flush, if you're caught in that, then that's just a bad trade. There's no way you should have been in that stock anymore. You should have been stopped out here at 8, or at least in here at 785. And then again, it just it starts to drift off. Let's have a look at recent history today. It was looking like it was, well, here we got this nice cup and handle pattern, and it popped. It did sell off, but you have to expect that from a 985 to over 1140. Buck 60 move. That's a big move. And again, don't forget the stock has come from 3, it's now 12. So it's a huge move. Or not, it's less than 3, pardon me. Whatever, it doesn't matter. It's moved a lot. So in here, we can just see it's a bit of a topping pattern. So it breaks out. You want to sell, when it broke out here, this is an ABCD pattern. Here's your A, here's your B, here's your C accumulation. Sell half of it when you get to the high of day. So you're already out half. Pops. You see this kind of distribution. You want to be scaling it out. It does pull back. Now it holds support, so you might not have got all out of all of it. And then gets back up to the high of day, pops through that. But you've seen this go 1, 2, 3, 4, 5 waves moves up, and now you're midday. So and it's drifting off on no volume. So you've got to be in this market. You've got to be expecting that we're going to get these flushes. So you just need to be protecting yourself against it. If you're in this trade and you have taken quite a bit of profit and you're looking to maybe see if it's going to hold this trend line and it fails it, you need to have your finger on it when it gets into this area where it's about, where it's a key support resistance level. You need to have your finger on the trigger. You can't be turning your head away. You've got to be watching this and for it to move. And if you start to see the selling come in and the buyers dry up, you need just to either make it a market order or, maybe you're in here with a 1125 limit on it, and it's 1165, or you put it in at 1140 or something like that, and hit as soon as you see it start to go, you hit the trigger. You got to be very quick. So in this market, you need to be, when you start seeing these topping patterns, you need to have your finger on the trigger, and you need to get ready to exit the trade. So the quick answer is, how do you protect yourself against these flushes? You can't instantly, because you don't see them coming. You don't know when it's going to happen. You just have a good idea it might, and you don't know when it's going to happen. And when they happen, they drop in an instant. $1, $2, before, and sometimes they get halted and then keep going off. There's nothing that says that this candle here in particular is the one that's going to get flushed. Just like it's no particular that this one here is going to be the surge. But what you do know is that you need to protect yourself in this market and trade these patterns and scale out, and that'll help protect your profit.
Don't forget to like and subscribe to our channel. Reach new levels of trading proficiency. Become a member at turbotrading.biz.